This was the day, or let me clarify, the 24 hours where I almost lost $45,000. It is Monday, December 19th, 2022. The market is not open yet. Uh, at pre-market, I'm doing my research, looking at what stocks gapping up, what stocks are gapping down, what is going on with the earnings, what are the news, and just seeing what will be my watch list for that day. And one of the biggest stocks that was gapping up or gapping down that just is gapping that day, it was Moderna and Tesla. Those were the two stocks that were really had range. Everything else were just general market stocks, like Meta, Microsoft, stuff like that. But Myrna really caught my attention because it was gapping up a lot. Now, what was the news that made Moderna gap up this much in pre-market? Which is a pretty decent, it's a pretty big move. It's a 10-point move to the upside. What made it run? So when I went to the news was Moderna was upgraded to buy from hold at Jefferies. Now, the biggest thing here was that they had a new price target of 275 up from 170. They increased their price target over 100 points, $100. So this was interesting. Now, from the open, I obviously did not want to long it because it's already up too much. My game plan was just see what happens, play the trend, yada, yada, yada. I saw that it popped, but again, this play right here at the open, there was really no play. Then the stock started to drop. And it started to drop to a point where it almost gap fills the whole entire move to the upside. Now, again, going back, the upgrade, it wasn't huge, but it was pretty big. And I didn't see a way where there would not be a curl if it gap fills all the way back down, and it did gap fill. So when I saw it, it's going pretty much down, and then when I started to see somewhat of a curl, I decided to enter. And the exact time I entered was at 10:02. So 10:02 candle is this candle right here. Let's actually zoom in a little bit. 10:02 candles right here. So as you can see, I did enter when it is starting to curl already. But I was expecting to scale in a little bit if it does go more to the downside, because if it does go a little bit more to the downside, it's better for me. I scale in because it's still going to go up because again they had the upgrade. I'm certain, I'm 99% sure if the stock will go more up. Now again, during my first purchase, I put in $12,000 buying power because my expectation was to scale in once if it goes a little bit more down with like $20,000 total buying power, do a quick move up and then sell it for, quick $1,000, $2,000 profit. That was kind of my game plan when I first entered. When I first entered, I was not planning to hold for a couple hours, let alone 24, a full day. It did kind of consolidate here, which again I'm fine with. It was kind of like playing around with this 194 resistance. Again, I'm fine with. So after I purchased my initial size at 10:02, it kind of started to consolidate, and then there was this big red candle. So I'm like, okay, if it could go all the way down to 194, which is kind of like that key resistance it was playing around at. So if it goes down to like 194, I'm gonna scale in with not double the size, but just a little bit more. So it drops, and I scale in exactly. I scale in exactly at 10:06 at the bottom of that red candle. So my first entry was at 10:02. Then I scaled in at 10:06. So scaled in here. Started to go back up. However, I was still red. I only saw a little bit green all the way at the top. I wasn't really up. I would just turn even, maybe a little bit up, but I did want a little bit more move to the upside so that I could become a little bit more green. I know that's not the best way to look at it, but I had a goal of like 198. If it could go up, I would sell it, but it didn't. It started to go more down, and as we look throughout the day, so I bought at 10:02 right here, scaled in on this red candle here, and then for the rest of the day, the stock just slowly went down. And throughout the day, I was scaling in, and every time I scaled in, I didn't do again. I didn't do double size, but every time I did scale in, it was money on top of money on top of money. So my overall buying power for this trade was huge. Now, to show you an example, this is how many times I scaled in, and this is exactly when I scaled in. So if we zoom in, these are just the times. I'll also show you the exact fills I got. So every single time here, I scaled in. And usually, if you look, I scaled in mostly. So, like for example, my third scale in was at 1020, 1020, 1020, which is this candle right here. Again, it's going more to the downside. Scaled in there. My next one was 1024. Again, went more down. I scaled in here. Then it was at 1032. Again, 1032 is right here. Again, it was going more down. I scaled in. So every time it kind of went down, 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 I scaled in to get a better average for my contracts. Because again, this is not even shares with options. I had same week expiration. Thankfully, it was Monday, so I had some time. But with options, as time goes by, your contracts lose value. So scaling in, if the stock is going against you and you really believe in the stock, is crucial in this situation. Now, the reason I scaled in so many times, I really knew that the stock would go more up. If it not today, then it would go up tomorrow. I really knew that it would go up because of the upgrade. There's no reason why the stock would keep going down or stay at this level. It's below the days before level, and it had a pretty decent upgrade that day. So there's no reason it should stay at this level. So here's every single order that I placed and exactly the price I bought it for. So as you can see, I started off buying it at $290 a contract. My second fill was at $255. My third fill was at $235, $205, $180, $155, $130, and then 1.113, and then $100 was my last fill. Now, another crucial thing to see here is every single order that I did was limit. Now, besides the first two, so the first two I placed, I saw that I was getting horrible fills, which is hence, again, why I also wasn't up after the first two fills when the stock went up, like a point. Why I wasn't up is because on these two fills, I got filled at the very, very tippy top. You couldn't get filled any higher. I got filled at the very, very tippy top of those candles, those 1 minute candles. And because I got filled at the very, very tippy top, that destroyed my fills and destroyed my average. And pretty much for me to make money, the stock had to go a lot more up for the options to move a lot more up for me to make money. So after the first two fills, I saw that the market fills weren't the best, so I switched all of the others to limit orders, and they filled the limit orders a lot better than the markets because, again, I say where I want it to be filled instead of it filling me wherever it wants to be filled on the candle. Now, why am I even talking about this trade, Like, obviously, you guys can see that I was down big time on this trade. Not only because I had big buying power, because my average was I was scaling in so much, I had so much buying power, and as you can see, the contracts went from beginning when I purchased from 290 to 100. So at the end of the day of Monday, I was down pretty big, but I looked at the calendar. There was not supposed to be any new news for the overall market, that would make it go up or down. I wanted the market overall, like SPY and QQQ, to be flat throughout the aftermarket and pre-market. And if that is flat, which when I looked at the calendar, there was supposed to be no news, nothing. The next day, Tuesday, Tuesday, Myrna would go back up because it's down way too much. So after watching this stock, after the close, I was even watching it after the close. It didn't really do much. Kind of popped here, went back down. It wasn't pretty much doing anything. So after 8 p.m., I pretty much stopped watching the market. But then something happened. At 10:02 p.m., around 10 p.m. Eastern time, news come out about Bank of Japan just full blasting, saying a lot of bullshit. Not bullshit, but a lot of negative things that affect the market. So these are just some tweets that were at that time that I was reading. Bank of Japan raises upper band limit on yield target to about 0.5%, whatever. Here, Bank of Japan market volatility has increased since spring, whatever. Bank of Japan at 10 p.m. Eastern time just started saying a lot of things that you don't want to hear when you're holding a stock long. And this was the result. S&P 500 and QQQ, which were the two stocks that I was watching, started to drop. And not a little bit, a lot. They started to drop a lot. It closed at like 380, and it went all the way down to 376, which is a 4-point drop, which is big. For aftermarket, that is big. It's going to affect. And who knows what's going to happen the next morning. It may go more to the downside. Now, at this point, I can't really do anything because I have no idea. Myrna is, the U.S. Stock Exchange is already closed. They closed at 8. It's 10 p.m. I have no idea what Moderna is going to do, but it's most likely going to follow closely to, if S&P 500, if SPY opened red, most likely Moderna is also going to go to the downside no matter what. So this is kind of that was my issue, that I was worried that if SPY keeps pulling, Myrna is definitely going to open red, and it's going to be very hard for it to go that much more up for me to make not only my money back, but maybe even make a little bit of profit. And then goes after 1 a.m., the stock, kind of not stock, S&P 500 and the Qs, they start to go a little bit up. And, that is a good sign for me for sure, because if we zoom out of the Qs, they opened a little bit red, but not as bad as this. It went back up, it curled back up, and it was kind of consolidated. It was, here it was right back at where it closed. So I was a lot more relieved, but still, anything can happen at the open. It's not, the bell didn't ring yet. I have no control of the options. I have to wait until 9:30. Now, so this is what SPY did, but if we look at Myrna, you can barely tell. You can tell that the stock was barely affected. This pull right here was the initial move from the aftermarket on SPY from the day before at 10 p.m. from the Bank of Japan news. But as you can see, it did curl back up again because SPY did curl back up. The Qs curled back up. The overall market curled back up. That's why Myrna was kind of following in some sort of way. So it curled back up, and when it opened, it almost opened where it closed, which is good news for me. Now, again, this was kind of spaghetti right here. I did not do any buy orders. I did not do any sell orders at this time right here. But I was kind of happy here because I was looking at my P&L, and it was going back to becoming even, which is what I want. I started to pull a little bit. Didn't really affect me because at this pull right here was where it closed, and it was pretty much approximately the same price, maybe just a little bit lower from, again, because a whole night went by. Theta kind of, it takes a little bit of money on the contracts here and there. And then it started to push. At this area right here, I actually started to become even. So I was even around at like this area right here at this consolidation, I started to become even. And if we look, which is the 195 area, the 195 area is where I entered the day before. That was my very first entry. So where I started to become even was my first entry the day before. And I had I don't even know how many entries, 8, 10, whatever entries. So if I didn't scale in all of this downside, I would have been super red even if it went back to my entry. It would have had to go way past here for me to make some money. And again, I had big size, so every single scale in was not small size. It was decent size because I knew I had to put in size, because when it does go back, I have to have a really good average to make money on the stock. So that's kind of the beauty about scaling in, especially for options, is you have to build your average. Because if you do not build your average, even if you go back to your entry, you still may be really, really, really red. And just to prove the options, that how badly they moved, and again, they moved badly, also due to the bad spreads, and that the volume was not too bad. The volume on these contracts, which were the 205 calls, by the way, December 22nd expiration, the volume wasn't bad. On Monday, the volume was around 2-3,000, and even on Tuesday, the volume was also around 2-3,000. So they weren't horrible. I mean, they look horrible here because it's close to the close. It's close to the close. Tongue twister. But at the open, as you can see, it's not the best, but it's doable. So now I just want to go to the 5 minutes, if it will load. And I want to show you where I entered. Actually, let's go even to like the 30-minute. Yeah. So 30-minute right here. So I entered somewhere around here. My first entry was here. I was scaling in all the way here, and I sold right here, somewhere here I sold. As you can see, that even though it went back to my entry, the contract price was still a lot lower. To give you exact numbers, my first entry was at 290, and 24 hours later, when the stock went back to my entry, the contracts were 180. So it went from 290 to 180 within 24 hours, even though it went back to where I entered. That is how crazy it is. So that is why scaling in is super crucial. So again, I was even here. I started popping here, and I had a beautiful sell somewhere around here. Let me tell you the exact sell. So I sold all of my contracts at 1024. Which was right on this candle right here. Wasn't the highest candle, but it was this candle right here, and I think that was a beautiful sell. I sold all of it because I just wanted to get out of it. I was green, and let me actually show you the fills. I was green. I wanted to get out of it. Ideally, maybe I should have kind of scaled out, probably sold half of my position here, waited, but this pull right here would have probably freaked me out, especially with the 24 hours that I had. This pull would have probably freaked me out. But again, it did go a lot more to the upside. If I held, again, could have, would have, should have. If I would have held, I would have made a lot more money. But I am happy with what I made. These were my, again, fills. So all my buy orders are here from Myrna. I took a little NVIDIA trade on Tuesday as well, kind of in between. I saw a nice pull, but this was just a quick pull. Yeah, it was a quick pull. Just quick $15 per contract. But here are all my sells. So my average was exactly, I remember because I was staring at it for 24 hours, was 1.84. $184 was my average. And then I sold all of my contracts as a limit order for 247. So I did make money. I did make a good amount of money. So I did not lose $45,000. At one point, I was down $45,000. That's where the $45,000 came from. At the lowest I was down was $45,000 on Monday. And then I sold it for each contract for 2.47. So average, I made approximately around like $63 per contract, which is good, especially with the size I had. Now I'm not gonna say how much money I made. Because this video is not about how much money I made. It's about the process that I went through. It's the whole video is about I believed in the trade so much that I put so much buying power into it. I put a lot. I don't think I've ever put that much buying power into an option trade before, but I really believed in Myrna, that it would curl, especially with that upgrade. And even this morning, there was another upgrade by another analyst. Not an upgrade. It was actually a price target raise. It was a price target raised by Piper Sandler, but that wasn't big. That was just they increased their price target from 214 to 217, so it was only like a $3 increase. The one on Monday by Jefferies was a lot more. It was over $100 price target increase. So I believed in this trade. I went for it. I put a lot of capital into it. If it did go more to the downside today, again, the news of the Bank of Japan, that would have destroyed not only the stock and the trade, it would have destroyed the contracts because it would be down so much. And most likely I would probably just sell in for a very big hit. Most likely, I don't even know. It would have definitely been more than $45,000. That is for sure. But I was probably just taking that big hit and just moved on with my life. I would have not taken it, nothing serious. But again, I did believe in the trade. The only thing I guess that was everything here was all estimated. The only thing that was not estimated is the time frame. I really thought that I could do this. I could sell on Monday. I had to hold it all the way until Tuesday. So full 24 hours I was in the trade. And the only thing that I was unlucky about in this whole entire trade was the Bank of Japan news. I did not see that coming. I did not know that's going to come. Nobody knew that was going to come. There was nothing I could have done about it. That's the only thing that really did not go as planned, is that Bank of Japan news. Now, again, nothing really happened with that Bank of Japan news. SPY just curled back up, so the market just curled back up. Would have I made a little bit more money? Maybe, maybe not. Doesn't really matter. I'm happy what happened, but everything else was planned. It wasn't really luck. It was planned. I knew Myrna could go back up, and it did. The whole point about this is, the more you do research on a stock, the more the more you practice on a stock, the more you, I know this may sound weird, but the more you feel a stock, the more you know a stock, the better your trades are going to go. Read the news. Read what's happening. I read what's happening on Murda. I saw the upgrade from Jefferies. Like, Jefferies is not the best analyst, but they upgraded the stock, and they did a very, very huge price target from 170 to 275. Because of that, I didn't want to long the stock from the open, because the stock is already up. But the stock gap filled the gap all the way down to where it was the day before. That is why I wanted to long it, because I knew it could curl from the news, and it did. Now, going back to the trade itself, I sold here. If I did hold it, I don't know where I would have sold it. Contracts, as I showed you before, later on just got trash. Fills would have been very bad. Even with limit orders, it just wouldn't be the best. I don't know. I'm happy with my sell, because I sold right before this pull, and this pull would have probably scared me out. I would have probably sold. Still just, got out even. Instead, I got out here, made a decent amount of money. I did not. I'm not gonna say how much I made. All I'll say is I did not make more than $45,000, but I was green. I was good. I was a good amount green, but I did not make over $45,000. Okay, but I was a good amount green. The only other thing I'm gonna say is, if I did hold it for a little bit longer, let's say even up to here, I could have doubled my money. All the money I put into it, all the buying power I put into it, I would have doubled it if I waited until here. But this is just a scary move. This is just it's not scary, but it's a lot for a person to handle. I already handled 24 hours with it. I know that may not sound a lot, but 24 hours with this on your head with that much buying power is very hard. But again, I believed in the trade. I knew what I was doing. I had my game plan. I told myself this. These are the plans you're gonna follow. This is the plan, and let's execute it. And I executed it very perfectly fine. And I am proud of this trade. Now, what are some key things to get out of this trade of mine? Thing number one is, know how much maximum buying power you're willing to put in the trade. The buying power I put into this trade total was a certain percentage of my whole entire account. You do not want to put, I would say, definitely don't put all of your account in one trade, and definitely do less than like 30-50% into one trade of your whole entire account. Because if this did go south, I could have eventually lost, I don't want to say all my money, but most of the money that I put into it. So if I did lose all of it, I wanted to make sure that I don't lose my whole account. So make sure it's, the ideal number I would say is, make sure it's less than 20% of your account that you're putting into one single option trade. Especially a trade like this, that it was same week expiration. And you just keep scaling in. Make sure you got to get to a point where you don't scale. You can't scale in, and scale in your whole account. You can't do that. You have to have a limit. That's rule number one from this trade. Rule number two is, read the news. Understand the stock. What is the stock doing? And if you actually understand it, the stock will most likely 95% of the time do what you expect it to do because you understand the move. If you don't understand the move, if you're just following somebody else, or if somebody on Twitter said this is gonna happen on this stock, you don't understand why it's gonna happen, so you're not understanding the reasoning. If somebody on Twitter told you, to keep scaling in, scaling in, scaling in, and you don't understand what is happening, why is he telling you to keep scaling in? Some people at some point might just sell and take a huge hit. I understood the news. I understood what my plan was. I understood what I expect the stock to do. I understood all of these, hence why I kept scaling in, hence why I held it for the next day, because I knew that it would push back up. It would curl. There's no way the stock is going to stay down that low after an upgrade, and then after it fills a gap and goes even lower than the day before. I have also been trading Myrna for a very long time. I know how the stock reacts. I know how the stock reacts. That's why I knew the trade. Again, the more practice you guys do on trading, the better you get. And you don't have to do practice with big size. You could practice just one contract per trade. But practice, practice, practice. Read the charts. See how the individual stocks react to their individual news. Every stock has its own characteristic, and understanding that characteristic is key in trading, especially day trading. So I gave you guys a lot of information in this video. The reason I showed you this trade is not to brag. I did not even say how much I made. I told you how much I was down. I was down a lot, and the whole point, again, I've been saying like the whole point, but really the whole point of this video is for all of you traders to learn how to understand a stock. Figure out, read the news, do your research before trading. Do not just jump in a trade because somebody told you, or you see something pretty, or the VWAPs, the yada, yada, yada. I don't believe in all that. I believe in reading the news, seeing what a stock is going to, seeing why the stock did what it did, and then making an, analyzing the stock and trying to figure out what it wants to do. That is the whole point of this video. And if you do that many, many times, practice, understand the characteristic of the stock, your trades will work. And believe in your trades. If you actually do your research, believe in the trade, all right? So I've been recording for almost an hour. This video might be big. I'm going to try to edit it to, shorter. I don't want it to be a whole hour. I don't want this to be a whole movie, but I just gave you guys a lot of information. Hopefully you guys enjoyed. So thank you guys so much for watching. Thank you all. Hit that like button. If you have a question, hit in the comments. If you're interested in my course, all the links are in the description. Check it out. Again, thank you so much for watching. I'll catch you on the next one.